Hello, Mark Sturdy here with this week's highlights of our research and with our multi-asset technical strategies of the 5th of July 2022. Let's just go straight to the summary and you'll see that very little's changed from last week. Basically, we're holding our powder dry with the exception of the dollar yen. Once again, it is basically that the dollar euro and the dollar sterling, the dollar's strength and the weakness of these currencies has reached the bottom of a trading range. The market's lingering there and not breaking out. And the same is true of the dollar sterling. On the other hand, the dollar yen is the one trend that is up and running, having broken the prior high. This is the completed flag formation, bull falling wedge, drove through the prior high, and the trend is ongoing. It's not constrained at all, whereas these are constrained. It is worth recording the sterling euro is still within the trading range established right at the beginning of the Brexit drama in 2016, but we are nearer the top than the bottom. So the sterling is on balance nearer to the top of that range, i.e. sterling is stronger than the euro, even though it's been weakening over the last few months. Stocks, we are in the middle of a pulling back phase. The S&P is off 25% from the absolute highs, but that we are not yet testing the bull market in any meaningful sense until we can break down through 33.97. The interesting one of these is the Eurostoxx 50, and we are bearish here. What has happened at the end of the month, the end of the last month, confirmed the breakdown through these prior highs. The market had traded down here previously, but always closed above or at them. This is the first month it has broken down through. So there's an unambiguous breakdown here in the Eurostoxx 50. There is also a bearishness in the medium term with the clear breakdown and confirmed completion of this bear continuation triangle. We are suggesting further falls down to 3,000 minimum. Same is not true of the FTSE 100. That's still within a trading range. Worth noting, though, there is a monthly key reversal in the monthly chart, continuation chart, and a weekly key reversal there, so that the bear evidence is stacking up for a break of this downside, but it hasn't done it yet. And the Nikkei is confused, albeit within the shape of a very supportive, very long-term piece of structure here we've often talked about, going right back to the 80s. The market's balanced on this neckline here, but it's not at all clear. Bonds, we're not changing our stance. The bonds are pausing and drifting back. Let's look at here's the pause and the drift. It's taken place over the last few 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months or so. We are coming up to, in terms of price action in the bonds, the bond price, just as the yields have drifted down, so the bond price has drifted up, but it's coming up against fairly well established resistance here, so we will be watching that closely. There are equivalent levels in the Bund and the Gilt as well. We don't have a stance in the oil at the moment. We're pausing up at this prior high. There are bull arguments. Equally, there are bear moves here, breaking down through this diagonal, through the support from these prior highs. So we're standing back watching. And similarly with gold, there is a bearish possibility, which will only come to fruition if we break 1677. We're nowhere near that yet. There was a key reversal here. The market does seem to have problems breaking up through that prior low resistance. So the pressure looks to be on the downside. There'll be sellers coming in if we broke 1792 in the August weekly chart. Until that time, though, we're standing fire. Thanks very much.